Okay guys, so welcome to my third part of my free trading course where I teach you all trading from basics to advanced stuff. Okay, so I hope you like this video, and like if you appreciate it, you can comment, subscribe or like or whatever. So at, on the second video we were talking about market trends. Okay, so we have two trends. We have an uptrend and we have a downtrend. This is what downtrend, aka bearish trend. Okay, so it's the bearish because look, here we have a low, we have a lower low, okay, and we are just trending lower. Here we have a high, here we have a lower high, okay, here we have also a lower high, look here, and also here. What? Okay, shit. Okay, you get me, okay, lower high. We are just trending lower, okay. So we have recapped the previous part. Okay, so today we're going to be talking about liquidity. Okay, so what is liquidity? Liquidity are resting orders. It's like, fuel, in a car, where you like get it and you can drive your car, because when you have no fuel, you cannot drive your car. Okay, so look, like maybe let's see an example. Okay, here we have had a lot of liquidity. Okay, you see these lows, when they do not get taken out, they build liquidity. Okay, so we build. Here we have a wait, let me find a better example. Okay, here, look. Okay, we've had liquidity here because we didn't take this high, and above this high were resting orders, which is the fuel, which gives market more volume. So when I want to take a trade, I want to see a liquidity sweep, which means that a high gets taken or low, and then it goes the opposite direction. Okay, so look, here we have this liquidity and this. Okay, we had a lot of highs which were not taken out. Okay, so we took this high. Okay, look, we took it, you see, we went above it and then we went lower. With my strategy, I could have taken this trade because liquidity sweep, inverse, okay, from here, inverse, stop loss over here. Okay, I would have gotten filled here, and I would set my TP here, and bang, it would be a really nice trade. Okay, so here, liquidity, you see, it got swept and then went into opposite direction. Okay, here we had liquidity here, okay, which was not taken out. We swept it, then we went high. Okay, again, where for an example, here, okay, here we have liquidity over here, we swept it and then we continued higher. Look, okay, here, look, again, a lot of liquidity, okay, liquidity, okay, look, it got taken out and then bang, went higher. Okay, look, liquidity, okay, it took it and then went higher. And also it's with the opposite direction. Okay, we have liquidity here, we took it, then we went lower. Okay, here again, liquidity here, we took it, then we went lower. Okay, look, a lot of liquidity here, you see, not taken out, a lot of lows at one place, boom, taken out, bang, spiked higher. Okay, look again. Okay, liquidity with a fair value gap, bang, spiked higher. So this is crazy. Like look here, liquidity, bang, swept higher, here liquidity swept higher. Okay, here look, liquidity, we went lower. Here, okay, liquidity with a fair value gap, 50-minute, definitely went lower. Okay, here liquidity, look, okay, it's too easy. Liquidity, bang, swept, went lower. Okay, liquidity here, look, a ton of liquidity here, look, like these lows were not taken out in these, and it bang, got swept, went higher. Okay, liquidity here, bang, got taken out and went higher. So liquidity is just like a gas for the market, where the market goes higher because of it, and it gives it more volume, like it can go higher, so it's one of the first confluences you want to know. So it's just like a lot of highs. Look, we have had a lot of liquidity because we're going like chopping around, you see, we're doing nothing, we were building a lot of highs, and when we built a lot of highs, it builds a lot of liquidity. Or also when we build a lot of lows, look, you see a lot of lows, we swept it. Look, low is just move down and up. Okay, this is a low. High is move up and down, this is high. Okay, so here we had a lot of highs, you see, bang, look, okay, bang, we swept it, then inverse this fair value gap. I will teach you this about, I should teach this in the next video, and bang, we went lower. Okay, it's really easy. Look, a lot of lows, bang, got taken out. Look, went higher. this would have been a beautiful trade on market open. Look, I did take this, I think. Look, okay, bang, inverse, spike, target this high, okay, bang. This was a beautiful trade, okay. I think I got break even here. I will teach you about everything, but this is it for today. Look, okay, again, liquidity sweep, bang, went higher, okay. Here was not session, so it didn't go high as fuck, but it went high, okay. Look, liquidity, bang, went lower, okay. So homework for you: look for liquidity sweep, and then reaction of it. Look here, liquidity sweep, bang, went higher, okay. Liquidity sweep, bang, went lower, okay. Liquidity sweep went higher, okay. Liquidity sweep went lower. Liquidity sweep went lower, okay. Look, and we dumped as fuck. What the fuck? Okay, and now we're here. Market is closed today, but go into the market and check it and like find liquidity. This is homework for you today. Thank you guys for watching and see you in the next video.